You are listening to Seven Horns AI, your AI-powered market briefing. Today, our top story focuses on Space Exploration Technologies Corporation, which gained 19.22%, closing near $161. This major move comes amid heavy anticipation of a historic index inclusion event. Now, moving on to the mechanics behind this massive surge. The advanced Oscar AI model from Seven Horns estimates that a price target of $274 is within reach before the July 3, 2026 inclusion window. This represents a projected 70% appreciation from current levels, driven by an unprecedented wave of passive index buying. Speaking of which, this technical rally stands in stark contrast to the company's underlying fundamentals. Research models value the fundamental business, which includes Starlink, space launch, and XAI, at just $48 per share, representing less than 30% of its current price. Furthermore, the company reported a loss of $4.94 billion in fiscal year 2025, followed by a loss of $4.28 billion in the first quarter of 2026. But why is the stock defying these fundamental gravity lines? The answer lies in structural supply and demand. Three index families are loading up on the stock almost simultaneously, including the FTSE Russell on June 26th, the MSCI Global Standard around June 29th, and the NASDAQ 100 around July 3rd. NASDAQ even rewrote its rules in March 2026 to allow mega-cap initial public offerings to enter within 15 trading days. This has set up a massive forced buying event estimated between $22 billion and $30 billion. Because the free float at inclusion is a tiny 4.2%, this forced buying represents 30% of the company's free float market cap. To put that in perspective, that buying pressure is 1.67 times more intense than Tesla's famous 2020 S&P 500 inclusion on a float that is 19 times thinner. Another interesting development to watch is the post-inclusion risk. Once the buying wave peaks around July 3rd, historical patterns suggest a 5 to 10% drawdown. The first 20% insider unlock follows in late July through September, adding gradual supply pressure. The key takeaway today, Sunday, June 14, 2026, is that while Space Exploration Technologies Corporation faces long-term fundamental headwinds and lack of profitability, the short-term index inclusion mechanics represent a powerful technical force that could push the stock toward the $274 mark by early July. That's your market update for today from Seven Horns AI. Stay informed, and we'll catch you next time. Visit sevenhorns.ai for more.